Welcome everyone to the Trading Success Blueprint, the Beginners Online Trading webinar. My name is Danny and I will give you the webinar today. Before we will begin, I would like us to go through some sound checks. Oh, I see there is a question here from somebody. Is that German? Not exactly sure what language that is, Mr. Lutz, Gregor Lutz. But that's not English, and unfortunately I can't understand that. But I would be happy to reply if you can just translate what you wrote down in some way. So before we will begin, I would like us to explain what will happen in the webinar in every step, and then we can hit the road. And just a second, I want to see the screen. Can everybody see the screen here? Thank you, David, that you can hear me well. Submit, very good. Darwin, excellent, excellent. So everybody can hear me and see the screen. I'm just going to explain what will happen in the webinar, and then we will begin. The first part, as you know, is more of an introduction to the facility, what we have in our services that can assist you along your journey with us. This webinar may be for beginners, but as you know, we're learning things here that are intermediate and advanced as well. And any capital markets and trading information disclosed in this webinar is provided for informative purposes only. It should not be constructed or applied as an investment advice, recommendation, or a suggestion. Now, guys, the first part, as I said, is more of an introduction. The majority of the webinar will happen with the basic things like sell and buy and pending orders that we will explore on the platform. Okay, I just want to make sure that the webinar is recorded, and it's a great time to say that it is recorded and it will be uploaded to YouTube hopefully today or later on during the next 2 days. Okay, oftenly all of our webinars are recorded and uploaded to YouTube, so if you missed a part or any other reason, to be honest, you can just access our YouTube and see it. Okay, guys, so I'm gonna go back in a few moments and then we will begin. Thank you very much. Okay, so everything seems fine, and like I said, we're going to begin with a quick introduction. Let's get ourselves a nice notepad to jot. Oh, there we go. Okay, so as I said, I'm Danny. This is the Beginners Online webinar, and we're going to officially begin. So, as many of you know, as a regulated company, we exist since 2006. We have 9 licenses worldwide, and our customer service can be found here at the bottom left of the screen. I'm going to go ahead and say that this whole interface is just by logging into the platform. You don't have to do anything special to install or to download. And to get to the customer service, all you have to do is just to reach out at the bottom left, and you can chat with us. You can do it through WhatsApp, or you can send us an email to cs@avatrade.com. They're going to take care of all the customer service inquiries. We have a question here from Hiwa. What indicator can we use to open a position? First of all, thank you for the lovely question, but I'm not exactly sure if you can elaborate a little bit more, so that can help me. An indicator to open a position, we'll see, we'll get to that. So as I said, the customer service is here. You can obviously reach out through here or through the email. They're going to take care of your customer service inquiries, and we have a senior account manager that can assist you from the trading side. So we have customer service for customer service and an account manager to assist you with the trading, including things that we're learning here today. Like I said, some basic essentials and even more advanced things like strategy or a plan. A senior account manager is more than qualified to give you an answer for that as well. Beside that, like I said, this is the web trader, but beside that, we also have the regular ones. The regular platforms, perhaps I should put it down this way. Trader and MetaTrader 4, sorry, MetaTrader 5. We also have Ava Social and Ava Options. Just on a nutshell, really, Ava Options is a very innovative app that allows you to examine options trading from a very nice perspective, where you can see the potential scenarios, and it does calculations that just saves you a lot of hassle along trading. It could also be good with analysis. Anyway, whoever is trading options, Ava Options is just probably the best solution that I know of. And regarding Ava Social, especially for beginners, so the idea is it's a social media social media platform. What it does is actually lets you follow other clients via some I would call it lists. You can see lists of clients, and you can just pick and follow whoever you like, in a way that you receive what your follower, the one that you're following, is doing, and you can take a further step and copy him automatically. And you can just indicate by looking at other clients, other traders, and you can just sculpt your own strategy. You don't have to do any of what I said, but it's optional. It's optional, and to be honest, for a beginner, there is nothing more useful than seeing somebody else is doing things that you would want perhaps to learn, right? If somebody is doing something right and you can acquire certain skills thanks to that, so obviously it's helpful. Yeah, so you can find it in your store on your device if it's an Apple or an Android. I guess whoever has it knows how to use it. And I'm just going to proceed with the web trader because the majority of our webinar is more involved with the web trader. I'm going to put it right here. I'm going to tell you something regarding the desktop version versus the app. There are a lot of things on the app that you can't see if you don't use a large screen device. And make sure that you tilt your screen so you can enjoy all the features that we have. Okay, you see, we added a lot of useful things here, such as signals. As an example, let me jump to that, and then I guess that you saw right away. Oh, you couldn't see it because the screen wasn't folded. Okay, so the first thing I'm going to show you, you see if I fold this down, okay, then I have lists of assets categorized here. We have Forex, indices, cryptos, and commodities and stocks underneath. And each, well, I don't want to say each. You see that some assets, well, in this case, it's most of the assets, but I want to show you that it's not always. You see, sometimes we have it and sometimes we don't. What is this tiny blue lightning icon? This is a signal. And the way that this works is extremely simple. All you have to do is just to click it, and it drops right away the scenarios for a buy and a sell. You can extend, if you want for your convenience, the arrow to see the screen a little higher. And then, like I said, it's already analyzed. Okay, the only thing I would recommend, though, so you can enjoy the signal to its full extent, is maybe it's a couple of things. You see that this levels here are presented daily. That means that the levels that we're looking at right now, there are certain levels on the chart which are support and resistance, right? Support will be at the bottom, resistance is here at the top, and I don't want to get too deep to how it works. I'm just going to tell you in a nutshell that resistance simplifies certain higher levels on the chart, edge points perhaps. You see only once or twice it's exceeded that level, and support is some kind of safety net supporting us from falling any further. So resistance is my roof and support is probably my ground, if you wish. And to see those levels, I gotta make sure I am looking at the right scope. You see? The second thing, okay, so the first thing is support and resistance. Obviously, if I would have been looking at an hour, I wouldn't be able to see beyond 189. And then I can properly analyze the signal. Okay, that's right. I said it. I need to analyze the signal as well. I'm not going to go blindly and just click sell or buy. I can, it's convenient, but again, I just want to make sure a couple of things. So one of the things is support and resistance, and you got to make sure I'm looking at the right one, right? This is daily, looking at hours, just prevent me from, I want to explain something before I carry on, just the logic of what we're looking at right now. Okay, the chart, the scope that I'm looking at right now is particular. That means that the most I can see, the highest that I can see is 187. Why is that? Because I'm looking at a smaller scope than if I look at a week, right? You see it's already here. And if I'm changing it to months, my scope gets even bigger. And then I can see more things. If, for instance, I minimize this for hours, yeah, does this make sense? Guys, I have to get some feedback if I'm going too fast. What I'm explaining presently, is that too fast or is that understood? Thank you, Hannah. That's good. That's good. Okay. So this is a webinar for beginners and I didn't want to run too fast. Sometimes it happens. Okay then. So as I have explained, I can minimize and maximize my scope by dragging down the wheel on my mouse, the wheel on my crosshair, right? If you scroll up and down, you can extend. And the other way is, like I said, through the time frames. Oh, some people here, Timbella, it's a bit too fast. Okay, I'll slow down. Okay, I'll slow down. What I was explaining in general, okay, so let me recap. First, we saw the web trader. The web trader has some nice features. We're covering the features. We went to signals. It's through here or through here. It doesn't really matter. Okay, then I expand to see it more wide, of course, with pleasure. With pleasure. If I don't get the feedback, I just keep on running because those lectures are, you know, so as I said, now if I want to see the levels that are here, I'm just changing it today, is that I can see the levels, right? It makes sense. The second thing that I want to see, and the reason that I'm checking the levels is because of what's written here. The market has already reached a key level. It already passed a certain segment from the signal production. How can I see? How can I know? Because it's written right here. And even if you go to the signal section itself, it's lined up by the signal production time, right? Why is that so important? Because what's more tasty, to get a bread that was just baked or a bread from a week ago? I don't know if this comparison makes sense, right? But look at the time that it was produced. Obviously, certain signals has passed and the efficiency of the signal also get affected. So for me, one of the things is obviously that it was produced not too long ago, or that it didn't pass those segments that we saw, right, on the chart. The second thing is, let me pick, where was coffee? Okay, never mind. Let's get ourselves something else. Let's go with, oh, that's already passed. That's already passed. You see, stop loss and entry and take profit are not occurred on the signal, and that's exactly the reason that I said a minute ago. Let's go with Dow Jones. Okay. Oh, maybe I've done it too fast. So look how simple that is, right? Just gonna click here, click, and there is a question from Nelwader, right? Nelwader, oh, Ismail, okay. The signal is assigned for buying or selling. First of all, thank you for the wonderful question. Nasuwa Kurai, are there any statistics showing the success rate of the signal? This is, thank you, but the signals are not our signals. The signals are from the trading central, and they can be amazing, but the question is how you maneuver with it. So like I said, the signals are basically instructions what to buy and what to sell and when, but they're not exactly guaranteed, right? If you don't do the preparations, if you don't look at when it was produced, if the market has reached, didn't reach, if you don't do risk money management, you can also lose, right? You can always lose. That depends on the preparations that you're making. That depends on the analysis. This is a great solution, but it's not absolute. I mean, it could, but again, you got to maneuver with it. It's okay. My point is there is more to it. There is more to it to simplify. Okay, then let's look at. You see, this is exactly what I have explained. This is daily, and I'm looking at minutes, right? So I can't even see those levels. To see those levels, this is daily, so I'm going to look at daily. And there we go. Now I can see. Okay. The higher resistance is around 3, 6. Oh, well, I can see it this way. I need to change to weeks. Not then even. Yeah, there we go. It's not really easy, right? Dow Jones is not an easy asset to get to its resistance, but never mind, you understood the logic. Now, the second thing, okay, so we looked when it was produced, excellent. We also saw support and resistance, also great. We have here the pivot point and with the buy scenario and the sell. Mr. Ismail asked if this is a buying or selling. Well, sir, that depends on you, right? We have a buy scenario and a sell scenario. Watch what happens if I decide to go with a sell. I don't know if you saw what happened. Okay, I'll try not to do it too swiftly. You see, I'm clicking here. This is the first time. I'm clicking here. This is the second time. Watch what happens. I'm not doing anything special. Okay, what happened is it placed by itself two things, take profit and stop loss. What they are doing is they allowing me to close automatically the position if it reaches that price. Okay, I'll repeat what I said a little slower. When I go with a position and I have marked a certain level on my take profit, what happens is it's going to take the profit from the position that I took. Okay, for instance, I took a sell, fine with the sell. That means that my ambition is that Dow Jones will get lower, right? If it gets this low, I'm going to have profits. How much profit? It says right here. And if it goes against me, and if, God forbid, I took a sell, but it was higher, so that means that I'm going to lose how much? It says here as well. Okay, so that saves me the trouble. Of course, I can adjust it later on if I want. It's not obligatory. It's not, okay? Let me show you. Just one last time and then we carry on. Let's pick something else. Or maybe I should have just refreshed the page. Yeah, you see, if I'll go with the FTSE as an example, okay, and I expand and I go with the buy scenario this time. Watch what happens. Place everything by itself, and I'm ready to hit the road. Right? Oh, it already passed. Oh, that's the spread. Okay, we're not going to get into that because that's another story which is not for now. The thing that I wanted to show you next is the news. Guys, the signals are produced technically. Okay, you got to contribute another layer, which is the fundamental analysis. The fact that you know if the market is going up or down, it's great, but you also need to know why. Why do we need to know the reason for the market? If it's moving or why is it moving? Who cares if it's moving or not? Why it's moving? I can just look for the direction and I'm good, right? If it's green, so I buy. If it's red, I sell. It should be fine, right? Or there is something in the news that affects how the market is moving. So, of course, there is something in the news. Everything is in the news, right? And we understand that, well, if somebody is pure technical, but he's not doing any fundamental analysis, let's just say that there could be some unexpected surprises, right? Let me show you just a tiny example, right? Yeah. So if you don't watch the news, you get tangled in a situation that could be either profitable or very hurtful. Okay? Yeah, those are daily candles, by the way. Look what happened with gold. Breached the resistance like it's yeah. Anyway, capture your fundamentals. Okay. So in the news, you can find exactly that. You go through the news, you see what's happening, when it's happening, and so on and so on. You can do it even more formally through the economic calendar. So all I did is I just kept going down, right? There is the signals here, there is the news here, there is the economic calendar, just pointing on it, going down, it's right here. Okay. And in a very same format, we have the category, not really categories, is more flags of countries that I wish to see. What's more relevant if I'm looking following the dollar as an example. We have oh, it seems like England, UK is marked as well. Let me go down to the bottom. When I unmark, it stays on US only. And with US only, I can see events by their importancy. We have high impact, low impact, and medium. Obviously, things that has the actual already occurred. Those are things that we are expecting. Those are things from previous, and so on and so on. And I can look for a particular event if I really want to. Okay, here there is the magnify. Perhaps it could be a little bigger, right? Now when I'm thinking about it, I can put here in the magnify just as an example, non-farm. I'm expecting it to find the non-farming payroll. Oh, that's the next one. Okay, we had one just last week, so oh, sorry. The following one is supposed to be in 2 days. Yeah, it's in 2 days. Yeah, so this is this week. You see the non-farming payroll. This is a high impact event. It's not really an event, right? It's more of a report. I don't want to, you know what? I don't want to get into that. Anyway, the functionalities here are super simple. You can just filter it by the country. You can filter it by the importance, okay, and you can filter it by the date. It's super simple. You can click it and see it by yourself. And now we're gonna hit the road with a lovely asset that we're gonna find. But the US stocks, unfortunately, is not something that I can show now because the market is closed. But I guess, maybe guess. I'm not sure. Something here needs to be refreshed. Hold on. Okay, let's try metals or maybe agriculture. Is there something here? I think coffee was interesting, right? Coffee had a nice observation. Yeah. It should be good. Okay, guys, so we found a candidate. I'm just gonna clear the drawing here, and we are gonna begin with the second part. So to open the sidebar to the right, I'm just gonna click buy. Well, I could have done it here, right? Sell or buy. Let's go with buy. Then I'm gonna expand the arrows to see what's going on here. And we're gonna have a nice guide through from left to right, beginning from the search field to the right. So this is obviously the time frames. We already played with that before, minutes, right? This section is for minutes. This section is for hours, days, weeks, and months. Okay, one amount is months. Okay, if I keep going to the right, so we have the line, candles, or the bars. Who knows what's the main reason that we're looking at candles and not not the line. In the meantime, until I just a second. Yeah, so we have all of the, by the way, I forgot to mention that everything that we saw is on the web trader. Okay, to enjoy everything that I showed, you don't have to download or install anything. Just to log into the website, it's already here. The content is for you to use. Okay, and it can be found only here. You're not going to find it on MT4 and MT5. Let me wipe out the clean slate so we can look at the, just a second, so we can begin. Yeah, so now the way that we've done it, we went through to the right. The way that we've done it, we've put those rectangle is from here, from the inventory. Okay, if you were wondering. So I keep going to the right just a little bit. So we saw here is the search field, here is the time frame, here we have a question about why are we using candlesticks and not the line, right? Why candlesticks and not the line, right? Anybody know that? Anybody has any idea why using the candles and not the line? Because to be honest, if I'm looking here, we have a big bearish, so we have a negative, positive, negative, positive, negative, and positive all the way here. If I'm looking at the line, it's going to show me something similar, right? You don't have to be a genius. You see it's going down, up, down, up, down, up, and up eventually. So what's the difference? Why must I see candles and not this lovely line? I think, to be honest, this line is more fun, right? See, sometimes it's green when it's going up. It's very nice. Michael, candlesticks patterned are more in detail. Okay, okay. Can you give me some more, a little more than that? But you're right. You're in the right direction. Candlesticks gives more details. But it's not only that. You see that this rectangle, let me get rid of the background. Okay, I want to show you in magic. You see there is nothing here. Let me just change it to candlesticks. Then we have those nice tails. What exactly are those tails? Guys, you can see that those thin lines are actually prices that the asset is went through and went back. Now, this reversed hammer here is red. This reversed hammer here is green. How is this? How does that make sense? They look almost the same. They look at those guys, those two candles. Can somebody explain to me why one of them is red and one of them is green when they're looking almost the same laugh, the same shape? How is it possible? Look at the handle and tiny head, handle and tiny head. So what's going on here? Okay, just keep thinking about this while I explain about the rest. So here, if I keep going to the right, we have no crosshair. Now we do have it. You see, with no crosshair, nothing happens. With the crosshair, we got everything. You see, here it's mentioned specifically where I'm at and what the levels that we have occurred. So if I'll take this one in particular, okay, I'm looking at this guy in particular. And that's from the 13th, right? Yeah, that means, oh, hold on. Maybe I should have put it in the way that is on the platform as well. So that candle, let's just jot down its specifications, and then we'll see where we are standing. Open, close, high and low. So guys, the Gregor, quick candles show size of movement and direction, the same time frame mentioned. Okay. Michael, one is a hammer and the other order is stint up, indicating yes. But my question, guys, is very, very simple. Why one of them is red and one of them is green? How they look, to me, they almost look the same, right? Never mind, we were taking this guy. Gregor, you have up and down. That's not accurate. There is a reason why one of them is green and one of them is red. Okay, we're gonna crack it together. Don't worry. 173 close one, but nice try though. Very nice try. High is 182.05 and the low is 170. I know it looks very primitive, very primitive what I'm doing here. The starting is higher. Perfect. Ooh, that's perfect. That's perfect. Okay. So, Gregor, the starting is higher, lower than the end. The only reason, guys, that this candle is red is because it started here. Okay. And in here, do we have another one? Tambella, well, almost. The only reason is it started here and it went here. So it started at the white line and it reached to the red line. Okay, that's the only reason. Look how far up though. Oh, sorry. Yeah, that's what I wanted to do. Okay, you see it started here, it went down here. But you know what happened in between? You want to see what happened in between? Let me show you, okay? This is weekly candle, right? Now we switch to days. You see what happened? It went all the way up and eventually what happens at the end? Down. So does that mean, okay, that this candle is the red part, this partial, or the whole laugh? What do you think? The whole candle? Or what exactly the candle? From here to here or just in between? In the meantime, we're jotting down its numbers. Just gonna subtract, nothing too crazy. Just a second. 173 minus 171.6, that's 1.4. And we're gonna confirm it in a very nice way. So what's happening here, guys? I see two different figures. One of them is showing me 1.4. The other one is 11.7. Yeah, well, the whole laugh is 11.7 from here to here, and from here to here, it's only 1.4. I assure you that if we do here a similar exercise, we're going to find similar differences. Okay? And the reason is, like I said, this indicates me, I'll go back to days. This indicates me potential movement. If I'm looking at in here, I might think, hold on, is it going down or is it going up? Okay, and this consolidation area could be potentially very profitable. You see done here something similar. Never mind, I don't want to get into that too much. We're going to proceed. Okay, so to wrap the to finish with the guide through on the toolbar, I'm just gonna keep going to the right. So we have here the layout. We're not gonna delay on that too much, but we can see multiply charts. You see here, this indicated to 2. Yeah, and in here we have indicator. We're gonna put the ATR on. Oh, sorry, maybe it was a bit too fast. I'm clicking on indicator, I'm clicking on the type to filter, and I'm typing AV for average true range. The reason is I want to confirm, I just click and drag, right? But I still want to confirm our foundings. Okay, and in our foundings, we have 1.4 and 11.7. And it shows me here that the weekly ratio, the weekly potential movement is 11.456, right? And that leads me to my next subject. Now, I've put here some things that I think they can be very helpful composing a position. Okay, and if I'm looking at coffee, we're going to go to sell. I'm going to minimize the lot size to the bare minimum, which is 0.01. And now I'm looking at coffee as an asset that I want to make money with. How much money I want to make? Let me think. If I don't have a goal, let's suppose that this keep going red, right? Let's suppose that I aim for here, right? Or even let's go ambitious. Let's go 150. I like 150. It's a nice number. Let's say that our goal is white. Okay. Right. So we have 179 and our goal is 150, and I want to make today $1,000. Okay. And I want to make it the time lapse. Let's make it 1 day. Yeah. Right. And the movement. Okay. So we have a goal. If I wouldn't have a goal and I would take this sell, this position, can I know what happens here? Can I know when to stop it? What happens if it goes against me? Can I know anything without a goal? Not really, right? Just gambling here. But with a goal, I have a target. And if I have a target, I can find a meaning to get that target. Okay, what means I have to use? And now if I'm looking at the day, okay, so I know I can analyze days. I'm going to go to days. Perfect. Okay, so now price is 179. Aim price, we said 150. Is that realistic in a day? Yeah. What do you think, guys? I can't even see it, right? I took it to the extreme on purpose. Let's go back to weeks. Okay. What do you think, guys? Till tomorrow at this time, can we possibly get to 150 from here? What do you think? I'll be surprised. Okay. Tarisha, you say you'll be surprised. Okay. So that means you don't really think it can get there till tomorrow. Michael, yes, by tomorrow. Okay. Okay. We have one vote for yes. Who else thinks that this is realistic? Not possible. The question here is not if it's possible. The question is if it's likely, if it's average, if it's casual. You think that it's casually gonna move from 179 to 150, which is $30 when the average is 11, yeah? The indicator will tell the movement. Okay, Gregor, possible, but depends on the guys. My question is actually not really complicated, right? It's very straightforward. My question is if it's casually gonna move from 178 to 150 in a day. That is all. Okay, so Bobby, you don't think that it will? We have 2 votes no, 1 vote yes. I'm just gonna carry on with the explanation. Okay, so we said that the average is 11.4, which is approximately here, right? Now, if it's gonna move to here, will I be surprised? No, because that's my average. If it moves to here, will I be surprised? No, because it's still in the range. What about here? 157, is it still in the range? From 178 to 157, is it in the range, guys? Okay, let me take it a step farther to understand. Those are weeks we're looking at. Those are weeks. My target was daily target. So where would I actually need to look? Where I need to look at the days. Let me change the days. And the average for days is 4.5, right? 4.5, which is approximately here. Now, If I aim to here 160 from 179 in a day, again, I'm showing you here something that I hope that you'll grasp. Do you think that from here to here, that's average or it's exceptional? What do you think? Way off. Okay, okay. So we have Tembela also, you wrote no. Guys, is it in the range? Exceptional. Gregor? Okay, okay, okay. Now we're getting somewhere. Now we're getting somewhere. 175. Okay, okay. 175. Yeah, you know what? Okay. Let's try that. Okay. So Bobby, you said 175. What do you think? 175 is in the range or out of the range? It's messing around with us a little bit because it's dancing between up and down, but to be honest, it's pretty much in the range, right? I can say that. Yeah, I can say that. I can say that. Let's say, and how many dollars away is that? 179 to 175. That's approximately 4. Okay, what is the difference between the PAM and the ATR? It's one of the secrets. Not many people know, but the purpose here is to teach you as much as we can. So yeah, so the difference is this is potentially, this is something I aim for. I'm using this to indicate my potential. Here, it's already on the platform, and this is a number that was analyzed from previous candles. So what the ATR is doing is taking this candle, checking its average. This candle, checking its average. This candle, it's going to grasp no matter how many candles you want it to do. You see, you check how many, it's one of the accelerators. So one of the, you check how many candles, one packs for wielders, and it's going to take 14 weeks, days, sorry. It's going to take 14 days, and it's going to show you that the average is 4.5 according to 14 days. You can choose more, you can choose less, okay? But the potential, you see, it's lower than the average because there is no obligation for me to use the whole average, right? It's just the range. I can go before the beyond the range. I can go lower than the range. Of course, if I go for something like 160, yeah, to happen tomorrow, and it doesn't get there, let's say I'm not going to be surprised. Okay, let me put it this way. So I'm choosing something that is realistic, that I know that if it that it can happen, that it's realistic, it's in the range. Okay, then now, so we have 1,000, we have 1 day, we have $4 per unit for coffee. Now, how many units do we need? Or I should sell, how much coffee should we sell to make $1,000 with $4 per unit? Also, I'll give you a nice formula, and that will be, sorry, summary divided by movements equals units, or in other words, 1,000 divided by 4 is how much, guys? Come on, show me that you've learned. Show me that you've learned. Perfect. Michael, you're doing very, very well. Bashir, excellent. Very good. Who else, guys? Oh, but I think, I believe that when I'm writing down good job, I'm actually showing the answers. Never mind, never mind, never mind, never mind. Let's do it together one time, and then we can look at it together, okay? Now, another way to see it is just to simply mark the take profit to 175, as we've done. And I see that with 10 I make 40, so I can increase it gradually. I'll make 20, that means 80, and then I make 200, it means 800, and then 250 obviously leads me to my 1000. How much time we have left? Yeah, we're pretty good, pretty good. Guys, before I carry on, I just want to make sure, because in the beginning I was commented going a bit too swiftly. How is everything on your side? Do we have any question? Anything is blurry? Is it helpful so far? It's a nice way to compose positions. Well, that's the purpose of why we're doing the webinar in the first place. Of course, I'm happy that you feel this way. Okay, let's carry on. But the pace is okay, right? Okay, so let's carry on. So we have 1,000. Obviously, we can now set something called take profit. And Tambella, can we put the moving averages? Sorry, sir, not at this stage, because I have 10 minutes and I still want to give you another gift. Okay, I want to show you something called risk money management, and to give you one of the most powerful tools, not just for beginners, but overall as a trader, something that will carry on for you with you for years. Okay, I'm just gonna, and then I'll have to wrap it up for today. Okay, so as we said, 250 units versus $4, which is approximately here. It allows me to think this is a good place for take profit. And now I need to think about a stop loss. So where do you think that needs to be? What is the best place for a stop loss? Okay, if I'll put it this way, if I go straight forward. Okay, and let me ask you another additional, oh, sorry, this one should have been green. The other one should have been red, right? It's, guys, you notice that this is the opposite. When I'm buying, I want the SU to go higher. When I'm selling, I want the SU to go lower. But if it goes against me, I'm making a loss. Okay, I'm having a loss. Now, my question was, okay, I put it 175. Okay, we've understood that with 250 units, multiply 4 equals 1,000. Okay, so that means my potential profit is 1,000. Okay, great. Stop loss, hypothetically 182. Okay, and what will be my potential loss, guys? Who knows? Somebody can guess? Oh, it needs to be a little higher, I guess. Maybe here. I need to go as precise as I can for that. Oh, because it moved. Oh, that's very unfortunate. Very unfortunate. Never mind. Let's assume it's 178 still. Okay, but the point is, I'm gonna lose if I'm gonna look at the same differences. I'm gonna get the same result for the profit and the loss, and 1,000 after I'm looking at the balance, which in this particular case using this demo account is 10,000. Okay, because this is how I determine. How can I determine my exposure ratio? How can I determine? Just a second. Okay, so how can I do risk money management? I compare my loss to my balance, right? And that means, in simple words, if I can lose 1,000 out of 10,000, how much is that? Yeah, does this make sense? Is this for my whole account or just for the position? What do you think? Now the magic begins. Now you can hear the dimes hitting the floor. Is this for the whole account or just the position? Crazy, crazy. Yeah, well, I'm not surprised, guys. That's just how it works. That's for the whole account. And if I had more positions, if I had two more positions, is it still for the whole account or per position? Guys, my exposure is just on this position. What happens if it was part of diversification, right? Is it still 10% or more than that? It's a little more than that in it. 5,000 out of 10,000 is no longer 10%. It's 50%. What do you think about that exposure? Is okay or not? 10%. What do you think? Okay, 1.5 coming from Paul. So Paul, you're very conservative, 1.5. What do you think about 10 though? My question was what do you think about 10%? Is that okay? Gregor also don't like it. You say 10 out of 100 is too high. Okay, but if I don't want to go with 1.5, right? I think let's suppose that 1.5, again, it could be great, Paul. I'm not saying it's not, but hypothetically, let's suppose I want to go with 2% is an example. How can I make, let's do some adjustments. So this obviously is a picture that we don't really like, right? I mean, 10%, 50%. We understand it can get a little funky if things go sideways. So how can I adjust my, still I want to be in control. I don't want my money to drift, right? So how can I adjust my 10% to 2%? Let's make it difficult, challenging. How can I make my 10% to 2%? There are two ways that I can do it. There are two ways. Narrow, ooh, that's one, yeah, but I'm gonna save it for myself for 10 seconds, Gregor, and then I'm gonna give you a nice, good job. Okay, guys, what solutions do we have to adjust the stop loss, right? To adjust the exposure from 10% to 2%? Yeah, you already got it. That's good. That's good. But I want to see more people, guys. I see only 3 or 4 people commenting the right answers. If something doesn't make sense, I want you to tell me that it doesn't make sense, and then I'll go through that. Okay, so that's a good job. Good job. So you can lower the amount. And if I'll take lower quantities, so let me ask you a quick question here. To what number this needs to be reduced to be on 2% out of instead of 10%? Okay. I see a lot of answers. A lot of answers. How much do I need to sell them to potential lose 2% and not 10%? Yeah. Divided by 5. Very nice. Very nice. Ooh, guys, this is a lot of progress. A lot of progress. Very nice. So 50. So you're saying that if I'll change this to 50, I'm gonna see here 200, right? I should. Let's try. Yeah. Well, because it moved, you know what? Let me lift it a bit. I hope that nobody gets upset, but I do want to show you. Yeah, so you see that and the other variation is obviously to get this guy a little closer. Therefore, if I'll do this, oh, sorry, something doesn't make sense. 181, yeah, should be around, yeah, somewhere here. Okay, so I can do one of two things. I can minimize the lot size and I can get the stop loss closer, and this way I can reserve myself my analysis if I wish. And then oh, sorry, we got to change that. Yeah, and then if I wish to expose myself less, I'm able to maneuver it this way. Now, I want you to understand something. 10% could be one position, right? And if I want 10%, the whole account, let's suppose I diverse with, let me think. Let's say 5. No, 5 is too easy. Let's say 4%, 4 positions. What needs to be my exposure per position if I'm taking an average? If I think that 10% might be good for the whole account, not just a single position, what needs to be my diversification for per position? What needs to be my exposure per position if I'm taking 4 positions? 2.5, exactly. Now I know, guys, that you've understood. Now I know, guys, that we have passed that segment quite comfortably, and it seems like our time is up. So unfortunately, we do have to say goodbye. But I would like to thank the great audience that assisted me today with lovely answers and questions. It was very enjoyable. And I wish you all to make a lot of profits. In the end of the day, I hope all of you will succeed as much as you can. I'll see you tomorrow at the live Q&A. So you have a good one and have a good day.